Okay, I'm going to share a strategy that's best taken on days where there is significant news and the trade can be set up directly after the news event and also and most of these news events happen 8:30 a.m. Eastern, and you can also look for setups after the New York Open on news days when there's news at 8:30 a.m. Okay, so this is called the Ripster flip strategy. The Ripster flip strategy, and the reason it's called that is because we use a indicator called Ripster EMA clouds. And what we do is, this is a 10-second chart, so we set this up so that we have a cloud that has essentially the top of the cloud is the 1 minute 9 EMA, and the bottom of the cloud is the 15 minute 9 EMA, more or less. And I've done that by calculating out about what those numbers would be if this was a 1 minute chart or a 15-minute chart. It's a 10-second chart, so I can get into those specifics later. But basically, we create a cloud where the top line of this cloud here is the 1 minute 9, and the bottom line would be the 15. Now I have two bottom lines because the bottom line is not quite as clear. Sometimes you're going to have price coming down to this gold, and sometimes you're going to have price coming up to the blue. So that's why we have a couple different lines, because it's the outside, the bigger time frame, the 15-minute 9 EMA is not always, it's more of a zone than it is to the decimal. Okay, so here's the strategy. What you do is you wait for the news event. In this case, it was employment numbers, job numbers, to happen, and then you look for a trend, which is a new trend, which is indicated by change in color. So in this case, we had price that was ranging for about 10, probably about a good almost 45 minutes before the news. Price was just kind of going back and forth in a tight little range here, and color was red, but that doesn't mean anything. It just means it was more selling than buying, but it wasn't really anything. It was basically trading within this trading range, waiting for the news. When the news came out, we did a fake out to the downside, okay, and then a big push up to the upside, and that's when things, you could really see the EMAs spreading apart, which was giving us a green signal here in a green cloud. Okay, so what we do is we wait for price to retrace back to the money line, this blue and gold lines, call it the money line, and it can get within 5 to 10 points before it pivots. It can pivot away from it, but if you've gotten within 5 to 10 points of this line, you're okay. So using Heiken Aishi candles here, right here, Heiken Aishi candles, we can see when we've got a color change in the Heiken Aishi candles. Essentially what you look for is a doji or two and then a couple solid greens, and then you know you're good to go. You can also see MACD down here converging and diverging. So that's your buy signal, right? When you have a color change in the Ripster cloud after a news event, then you have a pullback to within 5 to 10 minutes of the money line, which is basically the bottom of the cloud. And then your Heiken Aishi changes colors, and your MACD also, you've got a hook and a convergence divergence, moving average convergence divergence. Okay, then to manage the trade, so you can enter here, I like to keep a stop that's about 10% of my drawdown. So for me, that'd be 35 points on 6 micros. You do whatever you want to do as far as your stop. But as far as trade management, the best way to do this is to ride the top of this cloud. So as long as price is staying above the cloud, I would stay long. The moment that you have either a very substantial profit target that you like, or you have a candle, a 10-second candle that completes completely inside the cloud, and that happened right here, then you can get out. So, you got out about, and this one got out about maybe 13 points off the top. Okay, and that's basically the way that works. Now, that was right after the news. You can also do this after the open after the news. Okay, so the next trade here is the New York Open. You can see how choppy it is here, and one of the clues as to what was going to happen after the Open is you can go to a little bit longer time frame here. I'm going to take the this is a 2-minute chart. You could use a 2 or a 3, I suppose. And you see this double top here? So this double top happened with weakening MACD. These are internal strength indicators. So that was kind of a clue there that this top, these highs was a paper tiger. It really wasn't going anywhere because it had no strength to it. So it was a push up, a pull back, and then traders thinking, oh, we're going to go higher again. You know, we just went so high off this news. And no, that's not happening because this was very weak compared to this one. So even though price was equal, the internal strength was very weak. So that was kind of a clue that it was going down. But anyway, watch for that color, the Ripster flip again. This is a Ripster cloud flip. And we get it here at 10:02. Then we wait for price to come back up to it. Now, it did come up to within 34, 39. Yeah, it came to within here. So you could have tried it here, okay? And it would have just come back and stopped you at break even, most likely. And then you could take it again here after it turned over here. So because you had I had a nice 35-point stop. Even if I had gotten short like right here and hadn't even had a chance to get any targets off, 816 up to 838, that's 22 points. I have a 35-point stop. So I would have only gotten 2/3 of the way up to my stop, and I would not have been stopped out, as this area up here was acting as very strong resistance. Okay, so that's why it pays to have on, when you're trading NQ, about a 35-point stop is about right, because price tends to move in 25-point increments before it reverses and pivots. So if you put 35 and give yourself an extra 10 points of padding, you're going to be okay. So in this case, you could have gotten short here, either gotten out break even or not been stopped out and stayed in the trade, and then stayed short or gotten short again here after this back test and this color change on the Heiken Aishi. This is the second attempt, and now this one starts to go, and this one stays under the cloud for quite a ways. Let's say you got short up here at 822. This one stayed under the cloud, did not close inside the cloud until we had 592. So that's about 230 points. So assuming you kept at least half your micros, let's say you could maybe sell some early on just to get to a break even easily and guaranteed a no risk trade. But let's say you had 3 micros left and you got 230 points off those. That would have been $1,380 off that second lot. So that's not bad. So basically that's how that works. Again, this is only for days really when there's news, and that doesn't happen very often, but when it does, you've got a good strategy here to use, and I hope you guys can use it. I have documentation on everything, all the settings and everything, so if you want it, let me know and I'll send it to you. Okay, that's it.